Richard Stockton is the president and CEO of a company called Braemar Hotels and Resorts. We've had him on the air before. Fantastic guy. BHR is his stock symbol. They are publicly traded. Of course, you can go to their websites. But I'll tell you what. Greg and I were looking through some of the websites that we're looking at here. And we're thinking, why didn't we keep super close in touch with him, invite him to Christmas dinner to see if we could...
I think there are several of his properties that we need to go visit
exactly right.
in person.
Richard, great to talk to you again, man. How are you, sir?
Yeah, good to see you. Yeah, happy to host you as a VIP whenever you like, Sully. You let me know.
We need to do is we need to go bring a Big Biz Show to go out there and do a show at your property.
Yeah. On location.
On location. Yeah. Hey, talk to us about the hotel market these days. It's interesting because COVID changed everything for everybody, especially hospitality. I see as open air indicators, as I love to do 3-day trips, that's my deal. If I leave on a Thursday, come back on a Sunday, it makes me really happy. Thursday night to Sunday.
Yep.
I'm seeing it more difficult, unless I've got a dude in the business like Richard, to get a room, to get it in a decent hotel. Is that an open air indicator say you guys are getting busier, or is that just because we live in Southern California here?
You know, rates are way up. And there's a recent report that came out, maybe you saw, which said that the number of hotels in the U.S. that are charging $1,000 a night has quadrupled this year to date, relative to 5 years ago before the pandemic, 2019. So rates have gone up, and they've gone up a little bit unevenly. You know, if you are looking at resorts, particularly luxury resorts, average daily rates will be up over 50% from 5 years ago. Whereas on the urban side, they're up, but not quite as much. And in both cases, occupancies are still a little bit lower than where we were 5 years ago.
Richard, talk about your properties specifically, because if you go to the website, it's really interesting because you've got some really unique properties there. But talk about your business in total for people who have not heard of the Braemar Hotels and Resorts.
Yeah, so Braemar is a lodging REIT that specializes in owning luxury hotels and resorts. We have a number of the hotels managed by major brands. We have a number of Ritz-Carltons. So say Ritz-Carlton Lake Tahoe, Ritz-Carlton Sarasota, Ritz-Carlton St. Thomas, Ritz-Carlton Reserve Dorado Beach in Puerto Rico. We've got a Park Hyatt in Beaver Creek. We have a Four Seasons in Scottsdale. Wow. So we focus on that luxury end of the hotel spectrum because we believe that over the long term, luxury hotels have higher barriers to entry. It's much more complicated to build a luxury hotel as competing supply. It's more difficult to finance. It takes a lot more time, a lot more resources. So that has some built-in protections to the inventory. That's why we're in the luxury space.
Can I ask you? The Fed Reserve just dropped interest rates half a percentage point, which brought us down to the 4.7 range. It's supposed to trickle into inflation, obviously. Does that affect your business? Does it affect the hotel business at all?
Yeah, it affects us in two ways. It affects us on the top line, and it affects us on what I'd say on the balance sheet. Clearly, we're starting to see in the hotel business some early signs of of economy that's getting a little tighter, and I think the Fed has kept interest rates high enough for just enough time to start to see that. You start to see unemployment ticking up. We're seeing a little bit of a pullback in demand for hotel room nights. So that's kind of the one thing. So this interest rate cut is a welcome relief. We want to put more cash into people's pockets so they can stay at our hotels. But then also from a balance sheet perspective, we finance our properties with primarily floating rate debt. And so we saw our interest expense triple when rates went up.
But doing non-dilutive debt like that versus equity is a smart play, and it's a little bit of a gamble sometimes when these things happen. But this is good news for you eventually here, because obviously mortgage rates and interest rates those type of interest rates follow the long bond. You can extrapolate the fact you'll probably be doing a lot better on the bottom line.
Yeah, and we use about 40% of our debt, so net debt to gross assets we call it. Which we think is a nice conservative level of leverage. You want to use as much debt as you can without putting the company at risk. And so we believe that in the hotel business, because it does go through cycles and it does experience some volatility at times, you don't want to go really any higher than that. In fact, over time, we might come even lower. And a lot of our peers have even less debt than that. And debt's expensive right now, so there's not a lot of benefit to taking on that incremental risk.
Richard Stockton, President, CEO, Braemar Hotels and Resorts, stock ticker symbol BHR. Richard, you mentioned Four Seasons Scottsdale, Dorado Beach, the Ritz-Carlton. As far as the acquisition process, how long does that normally take?
Yeah, from the time we start looking at an asset until closing is typically 6 to 8 months. We do a ton of due diligence. There's a lot of negotiation. But when we go under contract to acquire property, we do a kind of soup to nuts analysis of that property and its business, both the physical, but also the rate setting strategies and group business, et cetera. So it's a longer process, as with most real estate, but hotels are particularly complicated because it's heavily, operations based.
By the way, the website, bhrreit.com is the website. Of course, BHR is their stock symbol. You're publicly traded. I want to ask a question. Typically in a hotel arrangement, I've interviewed a number over the years, but not a lot. Isn't there an owner of the property and then they insert an operator? So in other words, we own a lot on the beach, and then Four Seasons comes in and operates. Is that how you guys operate as well, or do you just buy the whole lock, stock, and barrel along with the operating agreement that's in place?
Yeah, it's probably the biggest misconception for the man on the street about the hotel business is that when you drive down the highway and you see a Marriott, you say, oh, that's owned by Marriott. That hotel's owned by Marriott. It's typically not. It's typically owned by a real estate investor that owns a bricks and mortar. And then the real estate investor will potentially hire Marriott to manage it, but then also brand it, but sometimes hire a different manager entirely, a company that you've never heard of, to provide all the employees to manage the hotel, and then do a franchise arrangement to put the brand on the hotel. Yeah. So it can be up to 3 parties involved in a hotel, as you see it in the market.
When did you guys acquire Scottsdale Four Seasons?
It was December 2 years ago. Yeah. It's been a fantastic acquisition.
I'm glad you did, because I went in July 4 years ago, and I swear I thought I was at a Hampton Inn. No, I love Four Seasons. Yes. But when you're walking around the pool and there's empty chili dog plates on the coping, I when I saw this, I'm glad they did the acquisition, because it makes all the difference in the world sometimes how they operate and who the management is. You're a publicly traded company, Richard, and I know you can only say so much, and we'd love to have you back in the air again on a regular basis. Next 18 months for you, in as much as you can detail, what are you looking forward to, and what do you think is going to happen with your company?
Well, I could talk very freely about what the industry is looking forward to, and I think it's similar for us. We are in a period of where capital is constrained because interest rates have been so high. So as a result, there's not a lot of supply of new hotels coming into the market. The supply this year of new hotels is about 0.5% of the existing inventory. That compares with about 2% per year historically. So when we have less hotel rooms being added for the existing owners of hotels, that's good because there's more scarcity, and therefore our rates should go higher. And we're seeing that more, particularly in the end that is full service and luxury where we operate, versus the economy side. And so, that should be those should be the segments that benefit most in the next couple of years.
I think we'd like to have you come in studio, and maybe we do a Big Biz Show to go with.
I think so.
A tour of all of the properties, if I'm not mistaken.
Nice.
Hey, Richard, want to have you back. Thanks, brother. Richard Stockton is his name. President and CEO, Braemar Hotels and Resorts, BHR. You can go to bhrreit.com. REIT as in Real Estate Investment Trust, bhrreit.com. And there you go.